Hey scrappers, if you're looking to figure out what materials you should sell this week or hold this week, now is the time to do it. Our weekly report is going to give you that information, up-to-date market news, pricing. Let's get right into it and we'll talk about it inside. Hey scrappers, Tom here from the iScrap app and Rockaway Recycling, and today is Wednesday, June 4th, 2025. We hope that you're doing well. 5 months in the book. Hope everyone had a nice Memorial Day. I know that we were pre-recorded last week, so here we are. We're back and live, and if you have any questions, please ask us questions. I'd love to be able to answer those while we are live, and if we don't get to those questions during the broadcast, we'll certainly answer them later on. Don't forget to subscribe and like our YouTube channel. This way you're able to see our videos, get alerted when things are coming out. So if you have any questions, ask away. But without further ado, let's talk about some of the things that are going on in the world of scrap. So let's just talk about the tariffs, right? Today, the tariffs are going to weigh heavily on what happens to the market, in the market, and how the market moves moving forward. So today was like the last day or the day where all of these countries around the world had their deadline to send their best offers to the United States for tariff negotiations. In addition to that, last week, President Trump enacted another executive order, which raised the aluminum and steel tariffs to 50% from 25%, affecting some of the markets as well. But how are these things and how are these things going to affect the scrap markets moving forward? Well, steel and aluminum tariffs on outside metals coming into the country, you would think they would be good things, and they will be in a long-term perspective, in my opinion, but short-term, it makes it dicey. You know, you have this pot, and inside of this pot, there's 100 ping pong balls. But there's room for 200 ping pong balls. But right now, the United States doesn't want any other ones coming in. But if you do want to come in, you need to pay a 50% premium. So they want to be able to keep all the scrap inside of the melting pot of the United States. This way, we're just recycling our own materials. It's not being exported to other countries to then be sold back to us. That makes a lot of sense. But the tariffs getting added in there make it so that scrap or new product, not scrap, new product coming into the country is 50% more expensive than it was. Well, what reaction is that going to have to domestic material? You would think that domestic material can now be sold for more money, which it can be, because even if they sell it for 20% more before the 25% tariffs were there, well, then all of a sudden you can have things being a little more expensive, but not as expensive as they would be if material was brought in. But that's just assuming that materials were manufactured inside of the United States. If they're not, and they're coming in, these tariffs hit, those are things that cause disruptions. So when you have the markets in a bit of a back and forth swing right now, it really makes it difficult to gauge where they are or how they're going to react moving forward. So when I look at these tariffs, I'm looking at them in a long-term perspective, but short-term, unfortunately, we're just going to be getting burned for a little while. But we do see higher copper prices, which we'll talk about in a minute. But do we have any questions about any steel or aluminum? So a couple things I just want to talk about. U.S. Steel is being purchased by Nippon Steel, and that was the deal that happened a few months ago during the Biden administration, and Trump is going to kind of put its blessing on it moving forward in a positive light. So we're going to see that transaction happening. How is that going to affect some of the markets? Well, keeping more steel inside of the country is really, really great, right? But keeping them to a place where we're going to be recycling more, that's where we need to be able to get to. We need more steel mills opening. I know there's a couple being built in the Virginia, South Carolina area. That's a positive thing. Keeping U.S. Steel inside of the United States, another really positive thing, and not having that factory close and shipping that material overseas to be processed somewhere else, more positivity, right? So those are good things that are happening. But unfortunately, you see steel markets that are continuing to be battered down. You know, when I look at some of these steel markets, going down the amount that they have this year over the last week and a half. When I see prices up $5 or $10 per ton, that's kind of like, I write that off as a rounding error at this point, because when we have steel prices with, light iron 110, 120 a ton, that number should be 220, 230 a ton based on market demand, market needs, and overall just pricing when you compare it to historical pricing, especially with the growth that we're continuing to see inside of the United States. So I was wrong. Light iron's averaging 135, which is strong. So we're hopefully going to start to see that going up. But if you look at the screen, you also see $80 a ton. 6 cents a pound is 125 a ton, 105 a ton. Rockaway Recycling is paying $100 per ton. So when we look at some of these things, it's really hard to be able to gauge, are the prices going up? All right, we've seen a little bit of a change over the last month and a half, but what we need to see is really big growth numbers. And unfortunately, that doesn't happen week over week. That's more of a quarter over quarter thing. So what we're hoping to see happening in the third quarter, August, September, prices jumping $20, $30. Hopefully, we'll start to see some resolutions on multiple fronts that are going to affect scrap. Tariffs, trade negotiations, Ukrainian-Russian conflict, possibly having ceasefires or hopefully ending, right? Hopefully both, a ceasefire leading to it ending. But these are going to be major things that are going to be happening that will affect the metals industry in a really big way. So as we see these trade negotiations happening, I'll continue to report on things week over week as long as it affects the scrap metal markets. And if I think that it does, then we'll be able to go there. Bill says he's just got $250 a ton for Carbides yesterday. Bill, that's an excellent price. Probably getting at a shredder. I wonder if you're in Canada, Bill. Let me know if you're in Canada if you hear this. But those are really strong numbers. And when we see, a lot of people posting their prices, asking questions, when are the markets going to go up? Listen, if I knew that, I would be saving every dumpster I owned would be filled steel. But I continue to spin it as quickly as I have. And there's been very few materials that I've recommend holding on to other than stainless steel. You can see it scrolling at the bottom of the screen. Everything else, copper, aluminum, brass, wire, steel, in and out, in and out, in and out. Don't touch it anymore. So I'm looking at these, trying to figure out what's going on. Where's the demand for steel going to go? Is it going to stay at the furnaces inside of the United States? Is that going to be not enough, capacity to be able to keep all the scrap here because there's not enough smelters? If there's too much scrap in the United States, that's a bad thing too. Think about it. If there's so much steel that's piling up at different steel mills and steel furnaces and steel manufacturers, then what are we going to do? We're going to be forced to export that steel at a discounted rate, which will pass that discounted rate forward to the scrap, which will make it even cheaper. That's a bad thing. So we're in this juggling act right now. And until we start to see major deals taking place with countries like Turkey, India, China, right? Those are deals, Canada and Mexico. Those are deals that will affect the scrap market so heavily that those are the things that we're looking for to be able to materialize and grow from moving forward. So, take that with a grain of salt. Take that with a grain of salt. We're waiting for things to happen. And unfortunately, we're in this phase, rolling our thumbs, kind of waiting for things to happen instead of in a look what just happened phase. Think about 2 or 3 weeks ago when the United States and the Chinese paused some of their tariffs, with the Chinese lowering to 10%, the US going to 30%. Huge market boost when it came to copper, immediate market boost. So that's a really great thing. But again, that was a temporary win. We're looking for long-term solutions. Any questions to be asked right now? Okay. Copper prices, super, super good. Can't believe that I'm saying this out loud. And let me tell you why. In the last week and a half, we've seen markets. Last week, we saw an 18-cent jump followed by a 10-cent decline. This week, that 10-cent decline has been erased, and we're back to the levels that we were about a week ago when we reported. So now we're seeing copper prices at some of the highest levels that we've seen in 2025. But more importantly, that Chinese pausing of the tariffs, the major tariffs, that reopened a closed door. because scrap stopped getting exported to China for about a month and a half. So that door reopening and material being able to flow back into China, that created another huge door that created more of a flow. So what did that do? That pulled some of those ping pong balls out of the bucket, shipped them overseas. There's less ping pong balls now in the United States, which means we start to see prices growing, because instead of having this material exported, or just, excuse me, instead of having that material stay domestic, which could create an oversupply, now we're being able to export it a little more. Having less material in the United States creates a little more of a demand for material to stay here locally, since we started to see copper prices increasing. And I'll just read a quick snippet from an article that we read at oilprice.net. Copper prices have been fluctuating significantly in response to evolving trade policies and agreement between major economies, i.e., tariffs, the stabilization of the US dollar, and potential Federal Reserve rate cuts could further impact copper prices in the near future. I expect that if we see a rate cut on copper, that we're going to see copper prices increase. Excuse me, a rate cut on interest rates, I expect to see copper prices increasing. Why do I say that? Interest rates going down makes it less expensive to borrow money, right? Because if these manufacturers, many of them, you may think they have just millions and millions of dollars of flow. Many of them work off of lines of credit and income flowing. So they use their bank as a true bank, using the bank's money. But as they use the bank's money, the bank charges them interest. Higher interest rates means they're paying more money out, not keeping as much in their pocket. So if we start to see interest rates coming down, that means that the money that they're paying to be used is going to be going down. They can reinvest some of that money in employee wages, equipment growth. If we see this tax plan go into fruition and we see more factories being built in the United States, they're talking about accelerated depreciation for manufacturers. If that happens, manufacturing companies can now know, hey, we can go and open a $100 million steel mill, and the first year that we're in operations, we can fully depreciate the equipment. Well, if they do that, that's going to give them a tax savings, but they can take that savings, and instead of just pocketing it, they can put it into that new equipment. They can put it into new workers' salary increases. They can put it into increased benefits. That's how they're trying to make these things work. And I said this 2 months ago in April when the tariffs were announced, I think 2 months to the day. This is going to hurt short term, but long term, I do think that this is going to help. But that short-term pain is still pain, right? You go and bang your ankle and you have a rolled ankle, you know you're going to be able to walk again. But for the next week, it's going to be really uncomfortable. That's where we're at. We're in the crutches phase. But hopefully we've got the crutches off, the boots gone on, and we're only a few days, weeks, months from being able to go back to normal running again. That's what we're hoping happens to the U.S. economy. We're hoping that we're on a little bit of crutches while negotiations happen. Over the next few weeks, we start to see a dozen or more trade deals coming to fruition. If that happens in the month of June, if the new tax legislation passes in the next month or two, if some of the agenda items start to hit and interest rates start to come down, which could even happen this month during the Federal Reserve meeting in a couple of weeks, we may start to see the beginning of the path of where we're going. We just need to get there for a little bit. Any questions, Virginia? Got a couple things? Pablo, why does scrap yards hang up on me or put me on hold when asking for current scrap prices? Pablo, it's a great question. Number one, use the iScrap app to find some prices near you. Sometimes scrap yards, when you call them, the people that are answering the phones don't know the scrap prices. Not many scrap yards are as transparent and open with their pricing, say, as Rockaway Recycling is, having them listed online, or using the iScrap to have other prices online. So sometimes the person that answers the phone is just answering the phone, taking notes for the owner. I talked to a scrapyard owner this week in New York. He has 5 employees and 1 girl that answers the phone, but the girl that answers the phone, she knows, 5 or 6 prices, and anything else she needs to go to the owner for, because you're essentially providing quotes. So that's one reason, but that's a great reason to be able to utilize the iScrap app, download it on your phone, report your own prices, check out prices that other people have, and hopefully, Pablo, that gives you a little insight. But unfortunately, some scrapyards don't price or quote like that, and that's going to be a problem. LV Malls Plains. Tom, I have an aluminum plant opening near me soon. They plan on making 600,000 tons per year. Will this make prices go up near me in Oklahoma? It will be about 2 years. Yes, absolutely. Those prices should go up for the scrap yards. You need to be able to find a scrap yard that's selling to that plant, that's getting increased pricing because their transportation costs are down. Then if they're getting increased pricing, you should be getting increased pricing. But if that scrapyard is a smaller processor, half a dozen employees, 1 or 2 dumpsters, no major processing equipment, that scrapyard is not selling to the mill. That scrapyard is selling to another scrap yard who may be buying from 50 scrap yards, bringing their material in, making 45,000 pound loads to send to that mill. That's the yard that you want to be working with to be able to utilize that localized increased pricing when it comes to the scrap markets. So hopefully that answers your question. If it doesn't, please ask me another one. But those are some of the things on what happens. So when I look at aluminum pricing, I love seeing that we're having more plants open in the United States. Are you kidding me? That's freaking awesome. More aluminum, more copper, more steel plants all over the place gives us more opportunities to stop the exporting, keep the market, domestically strong, and grow it moving forward, because we'll be basing numbers on actual data and manufacturing inside of the country, which is really hard to come by. Another question. Jacob Solis, what about car batteries? I heard of a factory that closed. So I don't know what factory that is. Car battery pricing should be right around the 20 to 22 cent range. I've seen 1 or 2 pennies in growth, but overall, I haven't seen huge growth when it comes to lead pricing. Where's lead being used, right? Ask the question, why is lead in demand? What is lead being used for? Not going into monitors, not going into water pipes, not going into electric vehicles, not going into new construction. So where's the demand for lead? You may have lead, going into car batteries still. You may have lead in the X-ray markets.
TVs.
Okay. I'm going to pull this up. An EV battery company to close 2 Michigan plants. So if that's happening, that's because the demand for electric vehicles has really gone down, especially as they're talking about eliminating the federal tax credit of $7,500 for an EV purchase. So if they're closing plants in the country, that's because EV demand is down, both for car and large trucks. And hopefully that kind of answers the question. But lead, unfortunately, not a great item, and I went over some of the reasons why. Let's talk about catalytic converters, because we finally had some good news on cats. Wow! Or should I say meow? That's a dad jokes in me. Catalytic converters have been in the toilet for a year. We finally started to see some growth week over week. Platinum up almost 4%, palladium even, rhodium slightly down, but still about 3-4% higher than it was a year ago, right? So those are good things. But we're starting to see some of these markets moving. At rrcats.com, we're getting more quotes coming in. People are liking the higher prices, So those are things that are really positive that we'd like to see. Do I see catalytic converters going to levels that they were at 3 years ago? I've said that many times. No, please stop waiting for cats to go to $400 each again. That's just not happening. Our average cap price is around $90, considering it was at 73 last summer. I'll take $90, okay? But what we are looking at is what's going to happen down the road. Well, if EV demand continues to decrease, that means gas engines might continue to increase. That's a positive for the cap market. What happens if the Ukrainian and Russian conflict stops and the Russians are allowed to sell their materials into the worldwide market again instead of just flowing it to 3 or 4 different partners? Well, that could potentially push down the catalytic converter prices because there may be more market availability of platinum, palladium, and rhodium. What's going to happen if we don't have as strong of emission standards from the EPA on different power plants and power generating companies where they may have been using heavy catalysts? Well, that may be something that gets, hurt or damaged along the way. So we're looking at these things, but right now we are riding a little bit of an up wave when it comes to catalytic inverters. I think that everyone can see that. So if you do have questions on your cats, please ask them. So here's something else I'd like to talk about, and that's the carbide industry. Now, I know that many of you don't come across carbide often. It's not like drill bits from Home Depot or generally carbide. Those are normally regular everyday steel. They're not even high-speed steel. Carbide generally is used in the manufacturing industry because of the high strength and durability of the carbide while cutting things. So you're not going to be coming across carbide that often, but if you do have machine shops that you pick up from, you should be able to start to see the carbide that they have there. Now, what we've started to see is carbide prices jumping into the double digits, with some of our recent quotes over $10 per pound going out there. Why is that important? Well, it's not only important to the tungsten and the carbide industries, it's also important to the manufacturing side of things. And that shows me that there's manufacturing growth that's happening. That also shows me that because of the tariffs, less tungsten and carbide are being imported, which means the domestic product that we have here has been elevated in pricing. That's another positive when it comes to the short-term pricing that we've seen on carbide. So hopefully we'll continue to see these prices increase and level themselves out instead of having pullbacks. But I will not be surprised if we do start to see mini market pullbacks as more trade deals are announced. Don't forget, the more places there are to ship things out or bring things into with less trade barriers creates more of a free world economic forum, which should be able to push prices down because now competitors can come in and compete instead of just having things dictated to them where tariffs have no effect. And I'll give you a good story that I talked to my friend about yesterday. They're buying a machine for their scrapyard. This is not about carbide. They are buying a machine for their scrapyard that cost about $7 million, big shear. The parts are held up in customs in Europe because currently, if they ship them to the United States, the tariffs that have been placed on them will equal a $1.7 million increase. Now, the yard agrees to $7 million to buy it. All of a sudden, it goes to 8.6. Well, that's not in the budget. So they haven't even received these things because they don't know what they're going to do, if they're going to be able to sneak them in before things happen. Those are problems that could be solved in the coming weeks, where if it's announced, oh, there's just a 10% flat tariff instead of 40%. Well, that makes a huge difference, right? 10% on 7 million is 700,000 opposed to 1.6 million. Sure, they don't want to pay the 700, but they would rather pay 700 than pay 1.6. So these are things that are happening. This is one specific scrapyard. Think about the amount of companies across the United States that buys equipment from overseas. But that's why the Republicans are really talking about manufacturing more things here to keep that national security tighter. And instead of relying on outside equipment coming here, you're building more things in the United States. Those are just things that you have to think about and look at. I'd like to just talk briefly about a special topic that we have here, and that's the Chinese steel markets. I'm just going to read a couple of numbers. This is from Metal Miner. 2024 steel exports for the Chinese hit 110 million tons, up 22.7% year over year. Aluminum exports in China last year were up 19% to 6.2 million tons. Copper surplus 285,000 tons, the largest in 4 years. So we're starting to see things happening that are hitting these markets differently. The Chinese flooded the market with steel. Why do you think prices are so low? It's not just because of the tariffs. It's not just because of trade. It's because the market was flooded with so much material that it had a really big impact and really pushed things down. So if the Chinese dumped, let's say, 110 million tons is what they dumped last year, up 22%. So what's that? Let's say the year before they had 94 million tons. That's a 22% increase of material pushed out there. Of course, prices are going to be pushed down when 22% more material is pushed out there. That means they were stockpiling it, and that means that they saw what was coming and they pushed it out the door to be able to unload it on other people. Well, that's going to push markets down. You push that in. So will the second half of this year show increased prices? Probably, but it's going to be, a bit of a stretch to wait for. And those are another things that we're looking for. Any other questions? Great. Let's finish off with some questions here. Josh, what about manganese? Is there much of a market for it? So manganese is generally used inside of things like alloys. They're used in, manganese bronze. There's manganese aluminum. Pure manganese, sometimes you really need to check with your scrapyard. If I buy 500 pounds of it a year, that's probably a lot. So I don't have a huge answer for you. I would definitely talk with your own scrapyard to see what you can get, Josh. Jeff says, hello, I have a friend who has a garage and has been saving O2 sensors and spark plugs. How does he get in touch with you for those boxes you have? Great question, Jeff. rrcats.com. They can go right to there. They can be able to get a link. They can go and get free shipping. They can get buckets to ship those. So please, we'll put the post in here so the link in here so you're able to save it. But take that, send it to your buddy. Thank you so much, Josh. You'll be able to see some of the prices that we have on there. And if you have any questions on those shippings, just let us know. What else, Virginia? That's it. Okay. Listen, scrappers, it's been an interesting week in the scrap markets. Of course, we will be back live next week with another, live session. So any questions, save them for us, ask them here if you're not watching us live. Don't forget to like and subscribe to our YouTube page. Download the iScrap app and report your prices. If you have any other questions on scrap or the markets, let us know. My name is Tom from Rockaway Recycling in the iScrap app, and I'll scrap you later.